Hello and welcome. Today we are going to talk about everything you need to know before you start, or know about starting an LLC. Sorry, not before you start, about starting an LLC. I can't talk LLCs enough. It is by far one of the best tools, things that you can have as a business owner. I recommend them highly to most every business owner, not every business owner. It really depends on their goals. So keep that in mind. And that's why it's very important that you seek out local counsel in your jurisdiction to make sure that you're getting the right business entity based on your needs, not just based on what the internet tells you you need, because sometimes there are nuances to them, and knowing which one to pick is very important. So today we're specifically focusing on LLCs. In case you're new here, my name is Taylor Darcy from Think Legal, where I help you create the business of your dreams. So welcome. Please feel free to subscribe and or like this channel so that you can get updated every day we go live. We do go live every weekday except for holidays, and at 11 a.m. to discuss the important things that are surrounding your business. So please join me for questions, comments, anything you really need help with. So let's get started on things you need to know before you or about starting an LLC. Sorry. First and foremost, what starts the process is filing the articles of organization with the Secretary of State. Now, this is California specific. Some states have different rules. Some states have different laws. So you want to make sure that you're picking someone to help you with it, to make sure that you're getting it done correctly, because otherwise you can run the risk of having it done wrong, and then you end up it costing you more money or untimely delay, so on and so forth. The next thing, now you're gonna be waiting anywhere between a week, maybe 3 weeks, depending on how your articles are going from the state. But during that time period, you can still get your EIN from the IRS, and that is a fairly short process. If you hire somebody to do this for you, they should be doing it for you. You can have an EIN the same day, so this does not have to take very long. The next thing that you're going to want to do is, once the articles come back from the Secretary of State, the certified articles, you're going to want to file your statement of information right away. Now, in California, you have to do it within 90 days. I do it as soon as possible so that it doesn't risk hurting it gets forgotten about, and then you end up getting penalized for it. So when I do it, I make sure that I'm giving my clients as speedy a service as possible, and basically everything tied up in a bow to be done with it, so that you can go on and start your business and do your thing. The next thing that you're going to want to make sure you do is have an attorney draft an operating agreement. Now, this is one of those areas that's very important, because there are default rules, and then there are rules that you may want to change in your operating agreement to make sure that it complies, or that it's to the benefit of all the parties. It's not as important to have a operating agreement in a single member LLC. But, and here's the but, it's good to have a paper trail and get used to that mindset, and making sure that you're keeping up with those formalities that go with a LLC. This is really the big formality for an LLC. Everything else after this is pretty straightforward and simple. So make sure that you're not skipping this step for the sake of cost. This is one of those things that can come back and bite you later if you don't keep up with these things. So make sure you have an attorney draft an operating agreement. The next thing you want to do is check with your local city to see if a business license is required. Some places it's called a tax certificate. And this really depends on where your business is located. If you're located within the city, sometimes it's required, sometimes it's not. If you're located in an unincorporated area, such as the county of an area, then you may not have to have a business license. It may just be whatever you need, or a tax certificate. Just make sure you're checking with your local authority to make sure that you're prepared for that. Or rather that you comply with that law. And the reason why this is important that you do this last, or next to last rather, is that you don't know what your entity is and with the filing or the formation date until after you've done the articles first. And so the business license is typically going to ask you for your article date, when you were incorporated or when you were organized. And so you can't do that until you've got it back from the Secretary of State. The last thing is, if you're going to be reselling something, so say you buy something at Costco and you're going to be selling it in bulk later, or you buy it in bulk and resell it. And the best example I can give you is if you're buying water to resell it at a liquor store or anywhere, then what'll happen is the reseller's permit allows you to resell something at the cost, and then you collect the sales tax rather than getting sales taxed and then having to sell it to the person. It allows you to avoid that cost out of pocket and pass it on to the consumer, which is what a reseller's permit does. So you want to make sure you're doing that correctly. Next thing that you're going to want to do is be prepared. In California, there's an $800 minimum tax. This is regardless of whether you make any income. So just by forming the entity, you need to make sure you're prepared for that. Now, the way it works is the $800 is due 90 days after the month in which you form it. So it's technically around 120 days, roughly, give or take. Just depends on when you form, and also like as far as taxes are concerned. You form it at the end of the year, which is very common. Then it skips. It doesn't skip. You're kind of getting, you're working around the normal way. If you do it twice in the same year, or if you do it earlier in the year, then you may end up having to pay it twice. It is possible. So be careful, or be prepared for that. I shouldn't say be careful. It's not you don't have to worry about being careful. You just have to be prepared for it. Next thing you didn't need to know about starting an LLC is that a limited liability company does not mean no liability. It means limited liability. And so there are some instances in which case that they can pierce the corporate veil and get at your personal assets. We're going to talk about those in just a second. But the way the limited liability works is it's limited to the assets that are encapsulated in the LLC. So anything that's in the name of the LLC is where the assets are limited to. If, for instance, you do a home and it's doing a rental property, and you're doing a home to put the rental property in the LLC, the home is what it's limited to. So if you were to have a lawsuit against you or the home, then the most they can attach is the LLC rather than your personal assets that are outside the LLC. So it's very important that you keep everything that is relevant to the LLC in the LLC. The way that you can get around, or rather the what's called piercing the corporate veil, is under three instances. Is if you're undercapitalized, which means that you don't have enough assets to satisfy your debts, then they can come after you personally for them. If you use the entity as like an alter ego, so you use it as your personal piggy bank, if you're paying personal bills out of it. Now that isn't to say, and again, if it's a minor thing, it more likely than not will not be an issue. You know, if you buy lunch once on, oops, you put it on the wrong card because you forgot, right? That is not the same as paying rent, your personal rent, out of the business account. The idea being that they don't want you to give you the liability protection if you treat it the same as you would yourself, if it's the same thing. And finally, the last reason is they can pierce the corporate veil for fraud. So if you're using the company as a means to commit fraud, then they will pierce the corporate veil to get at your personal assets. So those are the top three reasons. But again, limited liability, not no liability. So you got to make sure that you're protected in that respect. Also, and this is another FYI, you need to make sure that you understand that you are still liable for your own negligent acts. You can't get out of it just because you have an LLC. So typically an LLC is really good for third-party liability, say employees or vendors or that type of thing. So keep that in mind, is that you can still be liable for your negligence, which is the short version of it is if you don't behave as a reasonably prudent person. And you can also be held liable for negligent hiring if you hire people that you don't do a proper background check on. The next thing that you want to make sure is that with an LLC, you need to make sure that you have multiple layers of protection and not just an LLC. Some people think they can just do an LLC and that's it, and you're going to end up with nothing. Or that's all you need. You don't need anything extra. Well, you really do need contracts that are in the name of the LLC that are customized to your business. And then also you're going to want to have relevant insurance. If you're a professional, errors and omissions insurance, and also an umbrella policy that kind of protects you, a general liability policy. And these will give you the best benefit for your buck. Now, does that mean that you'll escape all liability? No, but this gives you tools to keep your liability as low as possible. Keep that in mind, that it's very important that you're thinking of it as that you'll never be liable for anything if you do these steps. The truth is it's very possible that you could be liable for something that you don't see coming. So it's very important that you remain vigilant. Make sure that you're complying with the laws. Make sure you've got a good team to help you comply with the law. The next thing, everything you sign, everything you do should be in as an official capacity as president, CEO. Don't take out personal guarantees if you can at all avoid it. Those are some of the things that can hurt you later. It happened during the pandemic where I had a client who signed a lease. He had a personal guarantee. I recommended not. He signed it anyway, and now he's on the hook personally as well as the business. So that's the way the leaseholder fits around the liability shield. And so I always recommend either finding someplace different or finding someone who is willing to charge you a higher rate to escape that personal liability, because it's worth it, in my opinion, for the cost difference. So make sure you're signing everything in your official capacity as president, CEO, whatever title designation that you have. That's very important to make sure that people are on notice that you're signing as an official, not as your individual capacity. And then this is kind of like an extra point, but make sure that you're budgeting properly for your legal expenses. This is something entrepreneurs do that is really detrimental, is that they don't save any money in case something legal comes up, whether it be a contract, whether it be a lawsuit, heaven forbid, whatever it may be. Make sure that you're saving a percentage of your profit. Make that into your budget so that you're not having to come up with money you don't have in that instance. So save a percentage, 5% of everything, to make sure that you're being protected, or that you can protect yourself for contracts, for other things that come up, because they will. It's just it's a matter of when, not if. So keep that in mind as you're going through this. If you like this video or you want to get subscribed, don't forget to subscribe and hit the bell, and we'll talk to you later.